We're undergoing a once-in-a-century change here. Things are going to change in ways that we can't see coming. These are massive shifts that take years. And when you reach a situation where the entire monetary system is kind of reaching the end of its useful life, while that decays slowly, it tends to pick up speed at the very end. You won't know when that's coming, but you'll kind of recognize it. But also, stress and strain in the monetary system, stress and strain in sovereign finances can lead to other outcomes, again, which you don't see coming, which can, in and of themselves, cause the end of these eras. We're in the 1920s mode now with the speculative excess, but we're also in the 1970s mode where there's a threat of inflation. We're also in the 90s mode where there's a bubble in tech stocks. So there are all these different things coming together, all of which are helpful in understanding the important part, which is what's likely to happen next. But going into that, realizing we can't know and there is no precision. So the best you can do is prepare yourself for a range of outcomes.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexei Joranov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. Today I have the great pleasure of welcoming for the first time Grant Williams. Grant, it's an absolute pleasure to finally be able to speak to you.
Hey, Alexei, yeah, we've been trying to get this done for a while now. I'm glad we finally found a day and time to do it.
So you're the author of many podcasts out there, many great podcasts. You have also a newsletter that has been followed by tens of thousands of people. You have digged into like system thinking, like I think a few of big macro thinkers. I think you are one of those that I really follow for, especially those insights. A lot of people saw your interviews in the past weeks with Julia LaRoche and Adam Taggart, especially, that also had a lot of views and were widely popular. And today I would like, and that's what I told you before, have an attempt to dig deeper into some of the topics that you've laid out to understand a bit more in detail, like the cracks and the mechanisms that we can see, and so that the viewers can best prepare for what you think is the biggest, most important pivot in 100 years. But before we go into all that, there's a question that I always ask my guests if I've interviewed them for the first time, and it's the following, that might actually join the topic of today. The question is, what is your most heretical view on the monetary system?
Well, look, heretical to who? Heretical to the monetary system or heretical to the world? I mean, it's
I would say contrarian, maybe.
Yeah, well, look, it's interesting, I think, because unless you believe in the monetary system and you think the monetary system is totally sound, then every view is heretical, I guess. Right? Every view is contrarian because that monetary system has endured since World War II, essentially. And so, a big theme of this 100-year pivot that Dimitri and I are kind of this journey we're taking together is the idea that this monetary system is creaking at the seams and is reaching the end of its useful life. And that's a big deep people to think about because the monetary system is the water we all swim in. And so it's very difficult to recognize that it's changing, to even think about what it means that it's changing. But I believe it is. I believe it's a process. It's not going to happen overnight, but I think we are in that process now. So in terms of heretical views, as I say, to the average man in the street, my view that the monetary system is at its end of life stage is probably heretical. To the people paying really close attention to the monetary system, to what's happened to it, and who understand how these things work and how they sustain, I don't think it's heretical at all. So it's a really weird time. And I think that the answer to that question speaks volumes about where we are. Heretical views to people who really study it are nothing of the sort. And to the vast majority of people, they're completely foolhardy. And I think that speaks to how entrenched this monetary system has become, how much we all rely on it without even realizing or thinking about what it is, and how potentially disruptive the end to it will be.
So you've just said it's something that might also be seen as not as obvious for maybe other participants in the market or just people in general that are just going on in their daily lives. What are the tools? And then in this question, I would like, if it's possible for you to be really specific, what kind of tools or frameworks do you then use? I've heard you say or mention the quantitative cycles, the long-term debt cycles, Niels Howe, fourth turning. All of those are, I guess, models that you use, but how do you precisely go about it?
Well, the first thing to understand, there's no precision here, right? If you're seeking precision, that's a very dangerous path to start down because there is none here. These are massive shifts that take years, and when you reach a situation where the entire monetary system is kind of reaching the end of its useful life, while that decays slowly, it tends to pick up speed at the very end. You won't know when that's coming, but you'll kind of recognize it. But also, stress and strain in the monetary system, stress and strain in sovereign finances can lead to other outcomes, again, which you don't see coming, which can, in and of themselves, cause the end of these eras. Yeah, a perfect example was World War II. You know, with the Treaty of Versailles and the reparations that Germany was stuck with after that. It directly led to the rise of Hitler and directly led to World War II. It's only really in hindsight that for most people they can connect those dots. And I think when we think about the monetary system and how it works, and the reason why it's so difficult for the man in the street to really understand, I've spent 40 years in finance, but for the first, I don't know, decade and a half in the financial world, I didn't really focus on the monetary system. I didn't really look at how the world worked. You know, I had my little corner of it that I had to try and understand and had to try and make money from. And when you do that, you're really up close to everything. You're looking at individual stocks. You're looking at daily moves in markets, and that's what you need to do in order to function effectively in the corner of that world that you've chosen. It's only when you step back and look at the bigger picture, when you can find the room and the space to step back and not focus on daily movements and not focus on, I was looking at every tick of a stock when I was actively trading them. That's when you start to understand how the monetary system works. The ideal way, to be honest, for everybody to learn would be to start back and move in, would be to understand how the entire system functions. And then once you understand that, move into a more granular place and you know, choose stocks or bonds or European stocks or tech stocks and narrow it down as much as you want. So the world we live in now is much more short-term oriented. It's much more near focused. People are trading individual stocks, day trading them in a lot of cases and being kind of sucked into that world through apps and CNBC and all the things that make it look cool to be a trader. And you're not really seeing the bigger picture. For me, as a financial markets practitioner for a decade plus, not really understanding how the world monetary system worked, there's no reason why someone who's a doctor or a dentist who happens to trade their portfolio would understand that. And so this change is the cause of a lot of misunderstanding. It's the cause of a lot of confusion, and it's going to be the cause of a lot of pain and a lot of angst. And the troubling part is the vast majority of people won't see it coming because they can't conceive of a world that doesn't function in the way that they've become used to it functioning. By that I say, using my financial markets example, stocks and bonds traded not in any way affected by the financial system. They traded on news flow, they traded on company announcements, they traded on capital flows. The functioning of the monetary system had no bearing on how those stocks and shares and bonds and currencies worked. We're now going into a place where the stability of the monetary system is going to impact how things function, how things trade. And so people will necessarily and understandably be caught out by moves that they're looking at the headlines, they're looking at a particular stock, they're trying to figure out why it's moving, but it's part of a much, much broader shift. When you look for precision, as I said, there isn't any, unfortunately. I wish there was. I wish I could say to people, this is what to look out for, this is how to navigate it. That would be great. But things are going to change in ways that we can't see coming. And the first step on this, and I've become a bit of a preacher about this, to try and help people understand it, is to try and understand the monetary system, to try and understand how debt works, just trying to understand how fractional banking works. All these things that are component parts of our monetary system are important to understand, but you're not going to be presented with that information just by looking at news feeds and reading the Wall Street Journal. You have to go looking for it. You have to go seeking out books on financial history. You have to go seeking out periods in the past where there are parallels to try and understand what's going on. And that's why, Neil Howe and Bill Strauss's work has been really helpful to me in doing that, because they go back and they talk about previous periods where we've seen similar disruption, and they at least give you a historical context to help you understand the kind of shifts you're looking for.
You just mentioned this. Maybe history is best way of understanding what is happening today, because it's for maybe a lot of economists kind of a lab to understand where we're heading at. So which past era do you think offers the closest parallel to what we're living through now? Do we need to look at the 1970s with stagflation and geopolitical shocks, the 1930s to 40s, to look at a world that is a global order that is in transition and ridden by a debt crisis? What are the, let's say, periods of history that you think, or elements in it, in the geopolitical, military, or financial aspect, that could best underline what we're living through now?
Sadly, the answer is all of them. Because if you go and read one period in history that you just, like, let's say you choose the 70s, because inflation is clearly a potential big problem here for people and governments and markets. So if you go back and read about the 70s, you are going to try and fit today to that particular model, and you're going to shoehorn in the things today, and you're going to find whatever parallels you can, no matter how tenuous, and you're going to say, okay, now I get it. But going back and reading about the 1930s, the 1920s, 1960s and 70s, when markets, the Dow Jones went sideways for 15 years, all of these periods have an important role to play in helping you understand what comes next. The famous quote about history never repeating, but it rhymes, is true. And so if you try to find a repeat, you're probably going to set yourself up for failure, because you're going to be expecting a very specific set of circumstances to unfold, and something different will happen. So, the more you understand history, the more periods you understand of turbulence, particularly, understanding periods of calm in history, it's helpful in terms of understanding why it was calm, but it doesn't really help you understand the things that you're going to need to understand, which is chaos and disruption, and the world not functioning how you're used to it. So, the US Civil War, that was another fourth turning. It's interesting to understand what happened there, given what's happening in the United States today. The 70s for sure with inflation, the 30s with speculative, 1920s with speculative excess, the 1930s with depression. All of these historical parallels have a role to play in trying to understand the multiple potential paths that things could take from here. So again, I think we all get caught, and I do this myself when I'm interviewing people. We all get caught in trying to ask a question that will generate a definitive answer, and I think that's really dangerous, because there is no definitive answer. There's just, at this point, a greater sense of awareness, a greater sense of understanding historical parallels, and hopefully, the more you understand, the better chance you have of, when things unfold, however they're going to unfold, you can actually go, okay, I can go back to this period here, and I can see something familiar. What happened then? And it could be a blend of, we're in the 1920s mode now with the speculative excess, but we're also in the 1970s mode where there's a threat of inflation. We're also in the 90s mode where there's a bubble in tech stocks. So there are all these different things coming together, all of which are helpful in understanding the important part, which is what's likely to happen next. But going into that, realizing we can't know, and there is no precision. So the best you can do is prepare yourself for a range of outcomes, and not get wedded to any particular strategy that's going to, safely see me through these uncharted waters. I need to be flexible. I need to be adaptable. If anyone has sailed, and I'm not a sailor, but I've been out with friends who are sailors, they are prepared for where they want to go. They've got everything they need on the boat, but they also understand when they set out that weather can change, conditions can change, and they need to be able to change the place they're going to sail to, the direction they're going to sail to, everything, depending on how the weather changes. And that's the best analogy I can think of for the kind of times we're in now.
Yeah, I mean, that makes sense. If we look at the financial markets as this big ocean that we try to navigate with forces that sometimes are ununderstood. But let's then look at maybe the things that we do understand and that we can pinpoint. And in that sense, because you mentioned also before with Dimitri Kofinas, you have this podcast where you look at this big macro shifts, the 100-year changes, the 100-year pivot. Why is it 100-year? What how do you then date those things, and what are the precise, not sorry, I'm not going to say precise again because it's inducing into like what you just said before, that there's nothing precise about it. But what are, let's say, the symptoms? We can look at the bond market, we can look at geopolitical. What I'm trying to do here is to see and now take like those little parts that you've just referred to, and try to dig deeper into them, and to see, to also get viewers that are maybe not as familiar as most average viewers are into financial matters, to understand those.
Sure. It's probably a great subject to talk about. And the reason it's a great subject to talk about might surprise you. This podcast Dimitri and I are doing kind of sprung from around the beginning of this year. I was down in Australia, and I was having I don't know, a crisis of sorts. I didn't go out and buy a sports car or anything, get hair plugs, but I was trying to figure the world out, why it felt different. And what unsettled me, the trigger for this was Trump releasing his meme coin on the eve of his inauguration, which sounds like a random thing to trigger something bigger. But for me personally, there was something about that really unsettled me. There was something about that I was trying to understand. I mean, it's fine. He did it. It's not that. What I wanted to know was why that unsettled me so much. I think it was the fact that something like the office of the US presidency, which had, for my entire lifetime, and in fact for the last 249 years now, stood above the fray, above the country. It was the office that was important, not the man in it. That was a big change. The way Trump was approaching this was the office was a means to an end. The office was a means to enrich himself. And look, I'm not a Trump hater. I think there are some positives about Trump. I mean, there are some negatives for sure, but I'm not a Trump hater. I don't suffer from TDS. But I think I can see his flaws as well as his the benefits he brings to that office, and this was one of them. And so, as part of that process of trying to understand why I felt such unease, I reached out to some friends of mine. I got 5 of them to write essays for me for my February newsletter, Things That Make You Go Home. 5 guys that I'd had these conversations with in the past about much bigger things, and I just wanted them to write. And I gave them no brief. I just said, I don't want to tie you down to a specific subject. I want you to write about how you're feeling about the world around you right now. And what came back were 5 very different but very compelling thought pieces. The one thread that ran through them all was the fourth turning, which I found interesting. And then I recorded some podcasts with Ben Hunt and Dimitri and a couple other people, again, not talking about markets, but trying to ask these big questions about why the world had changed and why the world was shifting. And Dimitri and I had been looking for a project to do together for some time. We're great mates and we have similar ways of approaching the world, but we couldn't really find the right thing to do. And out of that came this idea of the 100-year pivot. And the reason I give you that backstory, given the context of your question, is that we both went into the 100-year pivot understanding that something was changing, understanding it's a once in a century thing. And the 100-year pivot really is more to do with the fourth turning, that idea of the seculum, which is 80 to 100 years. And Neil was an inspiration to both of us in terms of how we thought about this. So the 100-year pivot, it really just comes from this idea that we're undergoing a once in a century change here. But very deliberately, Dimitri and I both set out on this journey with no destination in mind and no real solid question to answer, which we both like to do in our podcast. The idea was to say, look, things are changing. Let's talk to people, find out a bunch of different perspectives on what that change means. What does it mean to philosophy, religion, markets, governments, citizenships, borders? There are all these ways that these huge changes can affect things. And we committed to not have a goal in mind, to go where these conversations lead us, and to pick the brains of people who we think might be the next logical progression as we try and understand what's going on. So we started with Neil Howe because it seemed like the right place to start. We followed that with Russell Napier, who has been, again, influential in both our thinking about the financial component of this change. We then spoke with Pippa Malmgren, who again is a big thinker and someone who thinks about the world in a very different way. And we're going to record our next episode tomorrow, I think, on Thursday. So this journey is going to take us in places we don't know yet. And so I think that's the important part of this, is to be open-minded, to be aware that big change is happening and to be open to it, and to embrace ideas that might have seemed crazy. We spent time with Pippa talking about the UAP phenomenon. And I did a podcast about UAPs maybe 3 years ago now, 3 years ago, with a guy called David Dorr. And at the time, it was a really kind of out there thing to do. And when I published it, I had a bunch of emails from people saying, "What the hell are you turning into conspiracy theories? What the hell are you doing talking about UAPs?" I was like, "Look, I just think it's interesting. It's an interesting subject. I have no idea. I'm not wedded in my belief that UAPs exist or there's intelligent life on other planets, but I'm curious about it. And I'm curious as to why it's suddenly become a thing, because it had very definitely become a thing quietly. Since then, obviously, it's become a much bigger thing. And now we've had congressional hearings on it, we've had whistleblower hearings on it, we've got people a lot more influential and a lot smarter than me taking serious time to delve into these issues. And that's a big part of what comes next, is being open to the idea that, I don't know, let's pick a couple of things, for example, to the idea that gold might once again be at the center of the financial system, temporarily, to the idea that the dollar might no longer be the global reserve currency, to entertain the idea that Europe might break up or the United States might break up. These are all ideas that justifiably you could have dismissed at any point in the last 70 years as having a 0% probability. My contention when I talk about these things is simply to say that they're no longer a 0% possibility anymore. Even the United States, even a civil war 2.0 in the United States, it's a very, very low probability outcome, but it's gone from 0 to very, very low. And that's a big change. Whether you believe it or not, that's a big change, because we've gone from the biggest country, the most powerful country in the history of the world, being completely stable, to having an element of doubt about the stability of that country. And there will be plenty of people who go, "Don't be ridiculous." And I totally get that, because again, that's the world we've come to expect. But my belief is that that possibility is no longer 0. And because it's no longer 0, it doesn't mean it's going to happen. It doesn't mean it's going to happen tomorrow. It doesn't mean it's happening in 5 years. But it means that you now have to devote some time at least to thinking about, well, what if it does happen? What does that mean? Because I think the one thing we can all agree on is a breakup of the United States or a breakup of Europe or a civil war in the United States is not an event that will be without consequences outside those borders. So I think you have to devote some time to thinking, well, what if these things happen? What if these crazy notions, these things that were unthinkable for our entire lifetimes, what if they change? It's a useful exercise and it's not time wasted, because if it doesn't happen, okay, great, but you've gone to the trouble of thinking it through. If it does happen and you've thought it through and you have an idea about what it might mean, then you're going to be in a better position than 99.9% of people, all of whom said there's 0 chance of that happening, so I'm not going to waste my time thinking about it.
Sorry to interrupt this episode, but I'd like to tell you more about what we do at GoldRepublic. At GoldRepublic, we provide physical gold, silver, and platinum, fully insured, fully in your name, fully allocated, in top-tier vaults, security saved in Amsterdam, Zurich, and Frankfurt. No paper promises, just real ownership, full transparency on your name. We are fully regulated and conduct regular independent audits of our vaults, with more than 700 million euros of precious metals under custody and 70,000 investors that trust us in the last 15 years. Our top-rated app gives you full control. Track live prices, explore detailed charts, and buy or sell in just a few taps. Whether you're hedging against inflation, currency risks, or financial stability, at GoldRepublic, we offer real assets to safeguard your generational wealth. Makes sense. And maybe it would also be useful to also then zoom in maybe into certain aspects of it. So for example, I guess the debt market is something that you also follow. That is maybe one of the biggest indicators of all that, is to see what's happening in there. And just recently, there's been the Moody downgrade of the debt eligibility of the United States that's been downgraded to AA1. Seems like a lagging indicator, because it was kind of obvious since the start that the fiscal situation in the United States has been degraded, or has been faltering since a few years. Is this just the start of what a lot of people are calling a sovereign debt crisis, that is just spreading from the mastodont, the United States, into something that is going to have global consequences?
Again, another perfect example for us to talk about. You've used the word precision a couple of times, and we all seek that. We all desire precision. We all desire an understanding of the outcome, and we all like to make it as simple as we possibly can. Is this the start of a sovereign debt crisis? Because once we can frame it as a sovereign debt crisis, we feel more comfortable because we know what it is. We can name it, and therefore we feel like we can deal with it. The US fiscal situation has been known for a long time. I mean, go back in the Congressional Budget Office forecast as far as you want, and the chart hasn't changed much. It's gotten worse for sure, but the US fiscal situation is no surprise to anybody. Does the Moody's downgrade matter? Well, we've seen S&P downgrade the US before. Moody's is the last of the big agencies to downgrade the US. So maybe it matters because it's the last one. So now there's no narrative to cling on to. You can't say it's AAA rated anymore. Yeah, forget S&P, but Moody's to have it. So yeah, it may matter from that perspective, but it's really confidence. This is all about confidence. Because that US fiscal situation has been known for such a long time, the fact that someone has now come out and said, well, we're going to downgrade you, it potentially hits confidence. And confidence is the trickiest of things, because if something is being maintained by confidence, we all know how fragile confidence is. And I did a presentation a couple of years ago based around the Emperor's New Clothes, and that's a story all about confidence. The Emperor had confidence in his tailors, who told him that this invisible cloak was beautiful. The people had confidence in the Emperor that he must know what he's doing because he's walking butt naked down the middle of the street. Everybody had confidence in everybody else until that one kid shouts out, "The Emperor's got no clothes on," and poof, it's all gone. So where we are now with the debt crisis, it's been unmanageable for a long time, but it hasn't mattered. As the various pieces of this start to mount up, and not just the financial component of it, but obviously the geopolitical component is very, very important. Suddenly, it's a problem. We've seen the bond market not behaving how we've been used to seeing it behave. Last night, 30-year went above 5%. That's a problem. That is a problem. That is something you can look at and say, this is a problem that I can look at and understand, because there are numbers around this. If the United States financing cost reaches X, we know that their only income is tax receipts. So we know what percentage of their income this debt service is going to take, and we can see their non-discretionary outlays. You can do the sums, and suddenly you can really put a label on things now, because it comes down to mathematics and not confidence. And that's what I think the bond market is sniffing out, this idea that relying for so long on confidence has its limits. So does it matter that Moody's downgraded the United States? I think what people mean when they ask that question is, are the markets going to fall tomorrow? It happened on Friday night. Markets open on Monday. Is it going to be a bad day on Monday because of the downgrade? It might be, it might not be. But what we tend to do is, if it's not a bad day in the bond market or the equity market, we sound the all clear and go, oh, okay, the market hasn't reacted, so this must be no big deal. It doesn't work like that. Gradually you're chipping away at the foundations. And some of the executive orders coming out, some of the stuff about Walmart profits and trying to cap Walmart profits. There are all these things that are happening that are chipping away at the foundation built on confidence. And so you're not going to see action, reaction, cause, effect. You're not going to see that change. You're going to see all these little things, and you have to try and keep them in your head and try and recognize they're important, even if there may not be an overt response to them, and realize that what's happening here is a slow erosion of confidence in the United States, confidence in the dollar, confidence in the global monetary system, confidence in America's standing in the world, confidence in the fact that we've had 70 years of largely peaceful times, confidence in the idea that the United States stays together, confidence in the idea that Europe stays together, confidence in the idea there won't be a war with China. All these things, the world functions peacefully because we're confident that none of these terrible outcomes are going to happen. And everywhere you look, confidence in those outcomes not happening is being chipped away at. It's so important to recognize that and not look for a headline or a market move or some easy, simple, clean demonstration that we don't have to worry about this. I think the days of those being what we can look for are gone. When they come back, I don't know, but for the next little while, it's not going to work that way.
Fair. But one could also argue that those headlines or those events are, let's say, little dots that point towards a trend or direction towards something. And that's what I also try to...
I think you're right. Yeah, that's exactly what they are. But along the way, we've been conditioned to each of those little dots. Okay, where's the reaction? We saw the tariff day, the Liberation Day tariffs get announced. We saw the Nikkei fall 7% overnight. We saw the Dow down 1,000 points at the open. We saw these things in reaction to the Liberation Day tariffs. Since then, there's been an awful lot of noise. There's been movement in both directions on the tariffs. There's been a trade deal announced with the UK, with whom the US has a surplus. Kind of nonsense, really. And markets are higher again. And so because markets are higher again, the signal that we took from the Liberation Day tariff announcements, the signal we took was, oh my God, markets are down. The Dow's down 1,000, Japan's down 7%. That was the response we saw. So we all went, oh my God, the markets define whether everything's okay or not. Now markets are higher again. People are going, phew, the Liberation Day tariffs don't mean anything. I've just finished writing. I just published a piece last night about this based on a conversation I had with a guy who's got to operate in the real world post tariffs. And what he had to say was nothing to do with markets. It was to do with supply chains and costs and working capital requirements and all these things that take time to feed through. The markets are an instant reaction. Anyone that panics about tariffs can sell their shares immediately, and that's what happened. But something like these tariffs takes time to feed through supply chains into the business community, and then you'll start to see what they really mean. And we're about to enter the period where that is going to start to manifest. So making it about markets, making it about a certain move in the bond yield overnight and then a recovery, the recovery is not the sign that everything's okay.
So that actually raises an important question, I think. And the question is, do markets have the capability to price in what you've been discussing since the last 35 minutes? Meaning, if there is in the market, because you've also mentioned in other podcasts that this is bigger than markets, it's outside of it. And that now we've just discussed how the markets price in things in the moment. And also some may argue that markets price in everything all the time without us knowing it. What is something that maybe it's a two-folded question, and maybe I'll have some difficulty formulating it, but you let me know if you understand it, is which assets or which asset would be able to price in something that the markets can't price?
Well, look, I think the two places you have to look at gold and the bond market, and not necessarily in that order, excuse me. I think gold has been screaming about this for some time now. All the headlines are about the price. Gold breaches 3,000, gold breaches 2,500, gold breaches 3,400, all-time high in gold. It's all about the price, which is, I think, the wrong way to look at it. This is not about price. This is a function of the demand for gold, and why are people so desperate to secure physical gold right now? That's one thing that is telling you something is important has changed. And the bond market, it's ultimately down to maths and it's down to creditworthiness. And so the bond market is always going to give you better signals than the equity markets. Now, it's interesting that in recent times, even the bond market has been corrupted because of QE, because of the central banks being forced to take actions in bond markets. The bond market kind of ignored the signals that the financiers were sending because there's a better way to make money, which was to ride the coattails of the central banks all the way down to the zero bound and beyond. And the bond market did that. We had $18 trillion yielding negatively at one point. $18 trillion. That's back to about zero now. Why? Why are we there? Because that was a really easy way for people to make money. It was to ignore the finances. Right now, the finances don't matter because the central banks have telegraphed that they are going to buy X amount of billion of bonds a month, and we can ride that. Well, once that's gone, it becomes about the finances again. And very quickly, you can see the bond market is now starting to say, hey, there's a problem here. And we're not going to be happy to fund you at 3% for 30 years. It's going to cost you 5% now. The US and every other major central bank in the world, and every other major government in the world has a lot of debt to roll over at higher and higher rates. So the bond market is an important place. The last place to look right now is the equity market. Don't look to the equity market for signs of something big happening. The equity markets just don't function that way in periods of excess like we're in now. There's an awful lot of greed, there's an awful lot of speculation, and that tends to distort equities. People don't tend to speculate in the bond market. Zero-day options in the bond market are not a thing, but they very much are in the equity market. Hood are not trying to entice people through their app to buy 30-year bonds. They're not. They're trying to get you to buy one share of Apple and then flip it the next day. So ignore the equity markets and look at the bond market and look at gold. I think are the two places that you want to look for signs of elevated risk. And I think both of them are signifying just that. The bond market is signifying an elevated degree of risk, and gold is certainly elevating a greater degree of concern on the part of those who are tasked with managing that risk, i.e. central banks who are buying gold hand over fist. So again, if you can find a way to get price for a moment and look at price action, it's not about the numbers, it's not about the absolute levels, it's about where these things are going and what's driving that. And the bond yields going down, rising is being driven by people not wanting to own as much debt at these prices, and the gold price going up is price insensitive buyers trying to secure a physical asset in limited quality in a world where there are an awful lot of claims on it. So they're the signals that you need to be looking at, and what the Dow Jones does, the S&P does on a daily basis, whether it goes down 3%, then up 5%. At this point in time, unless you are an equity trader, that's certainly not the most important benchmark to be looking at.
I'm tempted to go different directions here, but I'm going to stay for now in the bond market. I've had the conversation with Hugh Hendry, Francis Hunt a couple of weeks ago, and they had different diverging views on that. On one hand, Hugh Hendry thinks that in the case of China, China needs US treasuries to fuel that constant peg that they have with the dollar to keep the yuan low and be able to do the exports they still are relying on. And with Francis, I discussed how he believes that especially the 10-year US treasuries have been manipulated into being funneled into proxies like where you're based in Cayman Islands, Belgium, Luxembourg, and so on and so forth, to keep that demand artificial. Just like in the same way the petrodollar deal or arrangement was a way to keep this financing going for the US to expand their fiscal deficits. What's your perspective on that? Does maybe like the recent trip of Trump in Riyadh and in Qatar also underline maybe this reenacting of the importance of keeping this petrodollar agreement, or is it something maybe totally else, which is more of a mercantile nature? How do you see this?
Well, it's interesting because, and not sitting on the fence here, but both Hugh and Francis are right. It's about the sequencing, right? And this is the beauty of this kind of stuff. When you reach these pivotal moments in monetary systems, and also it's important to say here in geopolitical alliances, that's a very, very important part of this. The petrodollar system was a geopolitical alliance between the United States and Saudi Arabia that endured for 50 plus years. Really important to understand when something like that shifts, it's a meaningful turning point. So is Hugh right? Yes. Is Francis right? Yes. And I know that sounds wishy-washy, but again, they can both be right at different periods in time. And I think Francis's point, for example, if you think about the fact that the Cayman Islands is now a massive holder of sovereigns, if you think about the fact that yesterday or last week, the UK became a bigger holder of treasury bonds than China for the first time in I don't know how long. These are important shifts. And if you look at the overall holdings of US treasuries, you don't see much until you get into this granular detail. Can you realize that the allocations are shifting and the buyers are shifting? They're still staying at this level, but let's think about the Cayman Islands. Why is there so much US debt now being held by the Cayman Islands? Well, look, I don't know, and none of us know because it's completely opaque, but let's just speculate for a moment and think about that. Let's put ourselves in the place of China. And before we think about the bond market, let's talk about the great power competition that is clearly going on here. Anyone that wants to deny that's happening, I don't know what to tell you. China is clearly vying with the US for power. I don't think it wants to be a global hegemon, but it doesn't want to be under the yoke of the United States any longer. And I think if the United States were to implode, China would not shed one tear, and they would not step in to be the global hegemon. The world would figure out another system whereby we'd have to come up with a new currency system, a new trading currency, a new global reserve. It would all happen. It would be chaos. But China are not going to step in, I don't think, to stop that happening, because this is not about the monetary system. The demise of America would not be a problem for China. So if you think about that, and that's your starting point, and you think about potential deals in Saudi Arabia with arms deals and reciprocal arrangements and flows, that's all great, but it's all incredibly opportunistic. The petrodollar endured for 50 years because it was in everybody's interest for it to endure for 50 years. It worked for both sides really, really well for all that time. The last 10 years, it hasn't worked quite so well for the Saudis, and they've got someone else bending their ear. The US is now competition because they're a massive oil exporter. The US is competition to the Saudis, and China is a much better customer to them now. So these alliances that have stood for 50 years, and again, coming back to my earlier point, at any point in the last 50 years, you would have said, is this Saudi-US alignment going to splinter? Yeah, no. Why would it? There's no need for it to. You can't say that anymore. Flying around the Middle East and shaking hands and having photo opportunities with big arms deals and big deals that are being done is great. those deals will change in a heartbeat if the bigger global geopolitical power picture shifts. Those deals will walk back, they'll be broken. These are not abiding agreements like the petrodollar agreement was. So again, we come back to this idea of a world in flux. So if you're China and you need to hold treasuries for huge reasons, let's say you need to hold treasuries, are you better off holding them overtly in the People's Bank of China? Or are you better off holding more and more of them in the Cayman Islands, where you can sell them at a moment's notice without scaring the horses, where you can divest yourself of treasures should you feel the need to, and the sovereign reserves of the Chinese People's Republic stay constant or maybe decline a little? Meanwhile, they're shoveling treasuries out the door through the Cayman Islands in an attempt to lessen their reliance upon the US dollar. I would argue that would be a perfectly sensible strategy, and not just the Cayman Islands. Would I hold them in the UK? Would I hold them in Belgium, which is, that's largely Euroclear, but would I hold them in Belgium? I think all bets are off at this point, and every strategy that might either ring fence you from a capricious adversary, which the US has become, whether you like those words or not, given what they did to the Russian central bank assets, they've proven that under certain conditions, they cannot be relied upon as a trusted partner. Is it smart for all these countries to find potential ways around that? Absolutely it is. The incentives have changed. And as Charlie Munger so famously said, show me the incentives and I'll show you the outcomes. And the incentives here are to make sure you are not in a position to be compromised by a shift in attitude by the United States. So figure a way to lessen the chance of that happening. Gold is a great diversifier for that. Hiding your treasury holdings in plain sight is a great way to do that. The game is different now. The game is competitive and not a cooperative. And the sooner people recognize that, the easier it'll be to try and figure out the stress points and try and figure out the way things might unfold.
So the rules of the game have changed, and now my question would be, when will it be that the game itself changes in a way that we've seen? If we look at the monetary system today as one game, some might argue the way we see things develop, that some actors and players of that game are not satisfied with the rules anymore, and they want to change the game. And this is maybe China, in this case, Russia. It's some other countries, maybe like the BRICS in general, if we want to simplify it as a block. And some might even argue that, and you just mentioned it, we went from a system which is heavily more cooperative into more competitive, meaning there will be winners and there will be losers. It's kind of a zero-sum game. I think you had the conversation with Russell Napier, which I listened to yesterday, and was enlightening. I invite everyone to listen to that podcast recording that you had with Dimitri. And in it, there was something that triggered me. And the trigger was that we will not have one monetary system, but we'll have two monetary systems. And I like to dive into that because I think it's a very interesting thought that we see parallel systems being drafted, implemented, and slowly, once they come out of the sandbox and they're being actually used, they might even be able to develop in a parallel way until maybe the dollar fully collapses or fails. But there's also this dichotomy of, we just said it, China needs the dollar. So if the dollar fails, all the denominated debt that they issued to those countries, like the Belt and Road Initiative and so on, is also faltering. So there's also an incentive for them to keep the dollar maybe more diminished, but still there.
Yeah, but think about what you just said. You just said this idea of a world with two monetary systems. Triggered you. Of course it did, because you've only ever known, as have I, a world with one monetary system. It's a big change. And thinking about that is something you've not had to do for your entire life, and neither have I. And I'm nearly 60. So I have to think about that now. So look, it's once it becomes competitive, the decision-making process becomes different. The priorities become different. This monetary system that we've lived in has worked really well for everybody. I mean, look at the hundreds of millions of people that China's lifted out of poverty based on this system. But it's worked really well for the United States. Them having that exorbitant privilege of the world's reserve currency has worked really, really well for the United States. So if this monetary system is to change, it's going to materially impact the United States, because the United States standard of living has been extraordinarily good based on that. We saw Trump last week or 2 weeks ago talking about how American girls don't need $30 and don't need 200 pencils, I think is what he said. And of course he's right. But to have an American president essentially say to the American people, you need to think about getting used to a lower standard of living. I mean, other people might think it's just less excess, which is a perfectly fair way to couch it. I accept that. But realistically speaking, once you become used to having $30 and 200 pencils, and you become used as parents to supplying your kids with $30 and 200 pencils, if your president says, you might want to think about getting used to the idea of that changing, it is a reduction in your living standards because you are being told that you're going to have to get used to having less. So little things like that, which are laughed off in the press, and people make fun of Trump and what's he talking about, blah 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 blah. If you've lived in Japan or you've lived in Singapore or you were around when Jimmy Carter was president and we had the energy blockades and the power shortages, Carter told people to wear sweaters. The Japanese Prime Minister post Fukushima told Japanese citizens to eat more soup and wear more sweaters because of the power brownouts. We're not used to that. We're not used to being told that things are going to be worse. And so it's a complete shift here. And when those things happen, when you get a shift in a system that's worked really well for certain countries in certain ways, when it changes, by definition, the ways in which it served those countries will also change. So how has it served China? Well, it has lifted 800 million people out of poverty. So how does the system change for them? Okay, they're not going to be able to lift more people out of poverty. That's going to be a problem for the lower classes. But their target is now they've got a lot more people in the middle class. They need to look after the middle class. Middle class needs stuff. So they need to shift the system to account for that. The system that's worked for America has meant the Americans have an extraordinary standard of living, have access to really cheap goods, buy anything they want. And if they can't afford it, they can borrow the money at incredibly affordable rates to buy it. Well, that's going to change. And that means Americans won't have access to cheap financing and won't be able to buy everything they want. It's these big shifts that you can't pinpoint exactly how they're going to change. But when a system that functions a certain way changes, it ceases to function in that way. And so these are the big things you have to think about. You can't get granular. You can't say, okay, well, if it changes, these are the exact things that are going to happen. You just know that American standards of living are going to get lower. The stress-free life that Americans have lived is going to increase. The Chinese are going to have problems of their own. They're no longer going to be able to all move from the countryside to the city and get jobs. The alliances of Europe absolutely being steadfast in their alliance with the US. We're seeing how that's fraying already with NATO. China and Russia's alliance, Japan, Korea's alliance, China, Japan, and Korea's historical enmity towards each other. All these things are up for grabs. And so trying to boil it down to what's the stock market going to do is whistling past the graveyard. The stock market will do what it does in time. The trick is to find a way to understand the nature of these shifts and prepare yourself so that when the shift comes, you're more nimble and you perhaps recognize it a week before everybody else and have a chance to do something about it. It's not a case of sitting by the sell button and knowing exactly what you're going to sell on what day, because that's how it's been so far. The world is fundamentally changed in every way that we can imagine. And people feel it because they don't understand why the politicians these days are so much worse than they used to be, or grocery prices are so much more expensive, or why is everyone fighting on social media? We feel it. And that's why Dimitri and I are doing this podcast based on the feelings we have and trying to understand what they mean. But trying to boil it down to okay, so which asset class should I buy is the wrong way to think about it. It just is, because this is a much bigger change than financial markets.
And so there's change coming. We can see it because of the symptoms that we've just talked about in the past 50 minutes, but it still tickles me the urge of wanting to be more concrete about it. And I know that...
Actually, I totally understand that, right? I get it, because that's what we've been conditioned to do. We need to boil this down to an actionable idea, right? That's what everybody wants. Everybody wants an actionable idea, and it drives me insane. And I get criticized for it all the time. Someone called me, what was it, a gas bag or something. He talks without saying anything. I totally get it, because what people want is for me to say, this has been a lovely last hour. Here's the stock you should buy. And if that's what you think, you haven't listened to a word I've said. And that's totally fine, because I'm talking about things that haven't been the way this has functioned for years. You have someone on a podcast, I've done it myself, and this is why I never ask people for an actionable idea, ever, because I find that to be the least helpful thing you can give anybody. I really do. And I get on my high horse about this because boiling all this stuff down to a stock ticker is, in my way of thinking, a guaranteed way to trivialize the information and minimize the impact it will have on you. Because people tend to fast forward to get to the 3-letter acronym. Oh, yeah, buy this stock. If you go onto Spotify or Apple Podcasts or YouTube and Google in, finance podcasts or actionable ideas, there will be 1,000 people who are only too happy to give you an actionable trade idea that's going to make you money in this tricky climate. Great. Fantastic. So if that's what people want, there's no shortage of people delivering that. My belief, and I've stuck so firm to this from my time at Real Vision, where I didn't want to talk about actionable ideas, the conversations I had there where I refused as best I could to talk about the markets. I wanted to talk about people's experiences and the lessons they'd learned and the wisdom they'd created and the mistakes they'd made, because that stuff is actionable over and over and over again. If you learn why and how, if you focus on those two questions and not what, everybody wants what because it's easy. It boils all this hour-long conversation down into one thing, the what. And for me, the how and the why are much more important, because if you can figure out how to think about this, you can generate 1,000 trade ideas of your own. If you can figure out why things are happening, you can generate another 1,000 trade ideas of your own. And so I get really frustrated when people go, well, this has been a really interesting hour. Now give me an actionable idea on it, because you're not listening if you haven't heard 15 actionable ideas. Unfortunately, those actionable ideas are things like read about the 1970s, read about the 90s, understand the petrodollar agreement, understand why it doesn't work. All of those ideas are actionable, because by understanding them, you will be in a better position to adjust your portfolio when this stuff starts to become glaringly obvious to people. And you will have a much better idea of what the bond market is telling us. That's actionable. But boiling it down to a stock ticker means you forget all that stuff and just go, okay, that hour was interesting. The takeaway from it is not, I need to understand the world better. It's not, I need to read history. The takeaway is buy energy stocks. And that frustrates the hell out of me. I don't mean to get on my soapbox, but I can't help it. That word actionable triggers me in ways that I say I can't describe, but I don't have to now because you've just seen it.
True, and also I think it's a much more, let's say, philosophical, also sometimes a process is asking the right questions and to have a reasoning behind all those things. But what I meant by more concrete is more because you talking about changes, but the moving parts to me are not so obvious. I mean, we've spoken about the bond market, we've spoken about the geopolitical part. What I'm trying to get to is finding direction of knowing if it goes, it could be different, obviously, scenarios, because as you said, things are changing and you have to be prepared for the unexpected, pretty much. Basically, that's the bottom line, I would say. But still, I think it would be interesting to know what are the potential scenarios. For example, Hugh believes that one scenario would be that there's a deflationary shock in China that would drag the whole global monetary system down. That's, of course, his narrative. And every guest I speak to has their own views, apparently. And you might argue those are narratives and not necessarily always hard data or facts. But this is what I meant by more concrete. And I'm not sure if you were answering to my question or just in general, like making an observation.
No, just in general. But what's the best way for me to explain this? I think if you are once you boil it down to this high conviction. Now, if you're a trader, it's important to have high conviction in the short term, right? It's important to have high conviction, and it's important to have it loosely held. You've got to have really high conviction, but be willing to change it in 5 minutes if you need to. And Hugh's a trader. So Hugh has this really high conviction that we could see a deflationary shock in China that could pull the monetary system down. And Hugh will have a set of parameters that he'll be watching, and he will have a set of trades that he will put on to express that view. If 10,000 people listen to that conversation with Hugh, not one of them is Hugh Hendry. Not one of them will ultimately handle that the way Hugh will handle it. Even if he says to them, here's what I'm doing. These are the trades that I'm putting on to account for this deflationary shock. This is what I'm doing. Hugh might see something that completely invalidates his thesis and he's out. The other 10,000 people might also see that same thing that Hugh saw and do nothing about it. Hugh might double down. When it happens, Hugh will adjust his strategy on the fly. He will take in all the information he sees, and he might have said that if I do this, I'm going to go long JGBs. He might say, the way this is unfolding, I need to short JGBs. It's really dangerous for people to take advice from someone like Hugh. And I'll tell you why I mean that. That sounds really pejorative, but I mean it in the most complimentary way to Hugh imaginable. Hugh's a genius. Hugh is one of the very best at what he does. And so for people thinking, oh, well, Hugh's going to do this, that's what I should do, it's incredibly dangerous because of Hugh is in his talent and his ability. So this idea that I need to have a really strong conviction about a narrative and then I need to know what trades to put on is fine. And it's something everybody needs to think about. But for me, I've been heavily in gold. I've avoided actively trading markets because I'm so busy. I can't sit in front. I sat in front of a screen 15 hours a day at work and at home for 30 years, watching ticks in markets and responding to them in real time and tearing up ideas and doubling down on ideas and pushing bets and do all that stuff because I could look at my screens all day long in the office. At night when my kids had gone to bed, I could check in and I could stay on top of it all. And I had guys in the other financial centers around the world looking after those trades for me who would call me and wake me up if something material happened. I could do that. I can't do that now. I'm too busy with the stuff I'm loving doing, writing and interviewing people and traveling around the world to film conversations. I can't devote the time to sitting in front of the screen that I would need to trade actively. So I've been heavily in gold. I've been heavily in private loans to businesses that I know and I understand, and the founders that I know pose no credit risk to me or minimal credit risk. My portfolio is very, very different. So to ask me to say, okay, so what do you think we should do? Because what you mean is the people watching this who want to trade, who want the actionable ideas. What I would say to you is 5 years ago, get a massive amount of gold in your portfolio, find some people who you know and trust that will give you 7-8% yields on money you can lend to them, and stay away from the equity markets. And it's been incredible for me. I've slept really, really well. I've had great income coming in. My gold has performed spectacularly well. And I've not had to deal with any of the nonsense in markets. I've not had to deal with all the meme stock rubbish or the COVID collapse or any of that stuff. But I'm very different to the majority of people that tune into podcasts wanting actionable ideas. So by me giving you actionable ideas, it's doing a disservice to everybody because my actionable ideas are very long term. They're very set and forget. And, what I'm looking for in order to change the way I'm set up is going to be very different for other people. So, I'm not trying to avoid making predictions about the future. I think I've made plenty about the future, but they all boil down to one thing. The future is going to be very different to the past. And me making it more granular for you is doing you a disservice. I listen to what Hugh says every time I get a chance to read it. Do I do what Hugh's doing? No, because I'm not Hugh Hendry. I don't have Hugh's talent, Hugh's ability, never have had. Do I get some ideas from what he's saying about how to change and shift the way I think about how the world's going to evolve? Absolutely. But I could say the same for Jeff Gundlach. I could say the same for Warren Buffett. I could say the same for any number of people who I listen to, not because I want to know what trades they're putting on, but I want to know how they're thinking and why they're thinking that way. I don't necessarily need to know what they're thinking. I don't know if that makes sense to you. I'm a bit of a broken record on this. And I know that a lot of people will say, oh, that was rubbish. You tried to get him to give us a trade idea and he wouldn't. Just don't ever listen to me because you're never going to get that from me. But there will be some people, I hope, even if it's one or two, to go, actually, that makes sense to me. Because I think I can help more people by trying to say how and why you think about things than I ever can in giving you a what.
I totally agree with you. And I think the why is most important than the what. And in this changing world, with this volatility, with the rate of change that we're witnessing today, it's maybe the most important, one could argue, to be able to adapt constantly to what you've been facing. And one question I want to ask, because we're reaching towards like the end of this interview, is if we look fundamentally, really fundamentally, not at the price, not at everything else, at the nature of Bitcoin, which is always coming back. You're a believer in gold. Some people say Bitcoin is digital gold. Where do you see Bitcoin in this macro picture and in those volatile times as its function, as its nature? What role will it play in this changing environment?
Actually, you're going to love this answer, my friend. You are going to love this answer. I don't. I don't. And I'll tell you why. Hang on, let's just count to 3 because we've lost all the Bitcoiners now. I don't, because the best way I've found to explain this is my friend Tony Deaton. When I asked him about Bitcoin, knowing full well
Your
that he
friend
would
who?
never touch Bitcoin. Tony Deaton is a good friend of mine and a very thoughtful investor. And I asked him this question because I knew he would not touch Bitcoin. I was curious as to what he would say. And he thought for a moment and he said, it's just not suitable for my ends. And that's very much how I think about Bitcoin. It's not suitable for me. And I'm fascinated why so many people are so desperate to convince me about Bitcoin. It's funny. I've spoken about gold for years, but I don't feel like I've ever tried to really convince anybody. I've laid out the case for it. I've explained why I think gold is this or that, or why I think gold's an important part of your portfolio. And I've regularly said, I think you should own gold. But if anybody pushes back and says, why would I own gold? Oh, fine. It's totally fine. I won't get an argument going, no, let me sit you down and explain to you why you should own gold. This is how I think. And I understand the case for Bitcoin. I really do, because it's so similar to gold in a lot of its properties, right? And people call it digital gold and all that stuff. So I get the argument. So when I say it's not suitable for me, what I mean is I feel it's a speculative asset. I won't say purely a speculative asset, but it's become largely a speculative asset at this point. Whenever you hear people talking about Bitcoin, they're talking about the price. Michael Saylor says Bitcoin's going to 200,000 this year. Such and such a guy says it's going to $1 million. That's a speculation to me. And if I'm going to compare it to gold, the reason I own gold has nothing to do with the price. And you can listen to any number of podcasts that I've appeared on. I will always talk about this. Price is the least important thing about gold to me. It's the preservation of purchasing power. It's the stability it provides. And it's also the confidence that I have based on 6,000 years of recorded history, based on being able to go back to analogs of deflation, inflation, stagflation, war, all these things. Gold has been through all of them, and I know how it performs. So if I'm going to put my reserve assets into something, it's going to be something that gives me the lowest possible impairment risk. And that's gold for me. It's not Bitcoin, because I've seen Bitcoin go from 100,000 to 60,000. I've seen Bitcoin have massive drops in its life. And maybe over time, it proves to me in ways that I need to be proven that I can rely on it as a stable asset, as a protector of purchasing power, as a dampener of volatility. But right now, it isn't those things. So I reserve the right to change my mind. I reserve the right to own tons of Bitcoin in the future. But right now, for me, it doesn't perform the things I need it to perform in order for me to hold my reserve assets in it. So it's a no. And no amount of explaining why Michael Saylor's a genius is going to change my mind. I pay attention to it. I don't devote a lot of time to it because there are things that I'm more interested in. But if in the future I feel like Bitcoin has a place in my portfolio, I'll have no problem at all buying some. I just right now, I don't have any need for it. So I choose to ignore it. And that's not a slight on the Bitcoin community. Some of my really good friends are heavily into the crypto community, massive proponents of Bitcoin. And I respect their intellect. I respect their process. It just isn't suitable for me right now. And so I don't spend any time worrying about it.
Fair. That basically the day certain things, and I guess it's mainly related to volatility and the speculative nature of Bitcoin itself, will prove you that it will change, then you might reconsider it, I guess.
Yeah, there's nothing I would say that I will never own that. And Charlie Munger said, I'll never own it. It's rat poison. I get why he was saying it, but you don't need to say that publicly, because all you do then, if the situation changes, you've got to walk back definitive statements. To me, I have zero interest in owning Bitcoin. None at all. I don't want to speculate in it. I don't want to own it as a reserve. Could that change? Absolutely. And maybe it does. But when and if it does, you won't see me out banging the drum saying everybody should buy Bitcoin, because that will be a decision that I've made based on how Bitcoin has evolved, how my circumstances have evolved, how my risk tolerance has evolved, how my assessment of the macro environment is. All those factors might make me change to Bitcoin. And if someone asks me, and at that point I've bought some Bitcoin, I'll say, yeah, I bought some Bitcoin. And I'll explain why quite happily. But I'm not going to buy some and then proactively go out and say, hey, everybody, I bought some Bitcoin. You should too. I just don't think that's useful to people, because I've listened to thousands of people tell me they bought Bitcoin and I should too. And I've done nothing about it because I don't agree with them for the time being. But, things change.
Fair. Grant, I think we've reached the end of your precious time, I'm afraid.
That's it.
Not at all. I work for gold company. How could I claim such
I
thing?
know. I'm teasing you.
I do own Bitcoin though, but it's not interesting why. I won't get into that. But maybe as a concluding thought, and I would love to follow up on you with all kinds of other topics. This was the first conversation with you, and I hope it won't be the last. How can people best prepare themselves? What kind of mindset do they need to be able to what you think is this big change that is happening and will happen even more in the future?
Yeah. Okay. So let's try and come up with something actionable. I think I think these are big picture changes, and so I think that to prepare yourself, you have to take big picture actions, which don't involve an immediate change to your portfolio. For example, it doesn't mean you've got to sell your bonds or buy more equities or move from the US to the UK in terms of your allocation. I think the best way for people to prepare themselves. One, my answer to that is always read. In bull markets, bear markets, if you want to prepare yourself better, read. Read history. Read financial history, read political history, read. All the answers are there somewhere. Something has happened somewhere in history that will help you understand the situation and the likely outcomes better. So that's number one. And that is a constant. Number two, right now, I think as an exercise, one of the best things you can do is to find every outcome you think is completely implausible. Go and listen to people who will tell you why it's likely to happen. Dimitri and I recorded with Pippa. That podcast will go out this week. No, sorry, it went out last week. I beg your pardon. It went out last week. And in that, Pippa talked. I talked to her and asked her a question very similar to this. And she said, I've spent a lot of time in chat rooms and in communities of people that I fundamentally disagree with in terms of how they see the world and what they think is going to happen. And she said it was so mind expanding, understanding it didn't necessarily change my mind, but understanding how other people think is going to be important. And more importantly, being willing to entertain outcomes that you have heretofore given a 0% probability is going to be one of the best things you can do for yourself. Because I think by entertaining that, let's take the example of the United States breaking up. Let's talk about California or Texas saying, we're done, we're seceding. Think that through. Think what that would do to the world. Think of the uncertainty that would create. Think about the ramifications, the knock-on effects through America. It doesn't mean you have to do anything about it. It doesn't mean you have to go out and buy canned food and bullets and completely shift your portfolio to gold and Bitcoin. But the simple act of thinking that through will open your mind to so many possibilities, many of which will never come to pass. But by definition, if any of them do, you are in a position that 99.99% of the world is not in. Because if that happens, they are going to be going, oh my God, they've now got to do all the work that you've done to think this stuff through. And they are going to be in the middle of chaos with no plan. Same with Europe breaking up. Same with Donald Trump getting assassinated. Again, not a 0% possibility. When was the last time anyone thought about the assassination of an American president? No one thought Bush was going to get assassinated, or Clinton, or Obama, or Biden, or even Trump in his first term. No one thought there was a high chance of him getting assassinated. Now people are talking about it. Now we've seen attempts at doing it. What does that do to your worldview? What does that do to geopolitics? We saw what happened when 2 planes flew into the World Trade Center. We saw how that changed geopolitics, changed the course of America forever, resulted in spending the kind of money on wars that could have been put to incredibly better use at home. What does the assassination of a president, what's the narrative that emerges in the wake of that? Is the pretext for an attack on China? Or Chinese agents did this? We don't know. We're still trying to find out what happened to JFK. You think we'll know what happened with Trump? But I guarantee you there will be narratives in the wake of it that will foster division and resentment. So think that stuff through. These are the best things you can do. Again, you don't have to do anything about them, but taking the time to think about these things could give you a head start on 99% of the rest of the world. And if you are investing and someone says to you, I can give you a head start here, one of the greatest things you can be given. So yeah, those would be my best ideas for things to do for what they're worth.
Thank you, Grant. I think there was a lot of points that we can ruminate on it, think, and also dig deeper. And as you mentioned already before, reading, especially history, might be the greatest guide into understanding where we're heading at. And in other podcasts, you also mentioned resiliency as one of the biggest trait that someone can have today is that. But like for example, for myself, if I can just speak for myself, there's so many questions and so many fronts that need to be considered nowadays. If it's the environmental, do I live somewhere which is highly polluted, where I can have soil that is poisoned from agriculture or not? Am I in a country that is in the EU where more and more financial control will be pressed upon us with financial repression, CBDCs? With immigration, the social contract breaking up and meaning that I don't know if I can trust my neighbor. I don't know if there's a civil war breaking out. And all those questions are in perpetual motion, right? And this is maybe the scariest part of all, is that as I try to get or to understand from you, is to have like this data, those facts, or some point of views about certain topics, is that I feel we are living in a world where there's so much information that this overload of information and events create this opaque visibility, and thereby we want answers that cannot be answered in a way. I'm not sure if that even makes sense what I'm saying, but that's how I would resume it.
There's a terrific quote from T.S. Eliot, which I will try not to bastardize. I've used it in a number of presentations. He said, "Where is the wisdom we've lost in knowledge? Where's the knowledge we've lost in information?" And that's it in a nutshell to me. We're drowning in information. From that information, you have to distill knowledge, and from that knowledge and experience, you get to wisdom. And it's wisdom that helps you act in periods of uncertainty because you've been through situations before. But wisdom, I don't think, can be gained without experience, and normally painful experience. It's the mistakes we made that give us the wisdom not to repeat them. So whilst wisdom is the ultimate quest, we all want to be wiser, because wisdom, as I said, wisdom helps you act better and helps you avoid painful outcomes. We're stuck in a world of information that we're trying to find the knowledge in, and that's not so easy, but it's an important thing to try and do. So trying to distill the knowledge from all the information should be our first goal. And then taking that knowledge, using it the best way we can, and then applying the experience of using that knowledge, is what gives us wisdom. And that is how you get better at what you do over time. That's how you make fewer mistakes. That's how you find ways to entertain unlikely outcomes. All of this stuff, it's a never-ending, lifelong search. And that's another reason why I hate this idea of boiling it down into something actionable, because something actionable is actionable in that moment. And let's say I had given you a stock ticker to buy. Who knows, by the time you air this interview, the CFO could have been arrested for fraud. We don't know. So that's actionable is a moment. Seeking knowledge, understanding, and wisdom is a lifetime. And the more time you spend on those pursuits, and then using those and reverse engineering them to actionable ideas of your own, is a much, much better, and in the long term, I suspect, more productive use of time.
Fair. On this great last take, thanks, Grant. I mean,
Alexi.
if it was up to me, I would continue this conversation for hours.
Listen, I've got two grandkids who will start doing all kinds of stuff. There'll be dirty protests, there'll be all kinds of stuff going on if I don't show up. So I'm afraid we'll have to cut this short so I can go and placate them. Absolutely,
Thanks
we do.
a lot, Grant. I really appreciate your time and your wisdom.
You're very welcome. Thanks for having me on. I appreciate it.